What's up, you guys? Isaac here. So today I'm going to talk about the differences between a cash out refinance and a home equity line of credit, otherwise known as a HELOC. So I'm going to talk about the pros and cons between them. I'm going to talk about a couple of different scenarios that may make sense for you, and also which one is the right move for you. So first off, what is a cash out refinance? So literally what it is we're taking your current first mortgage that you have right now, we're gonna pay it off in full, and at the end of that transaction, the new loan amount compared to the old loan amount, you're gonna get that difference. So let's use a quick little example. Your first mortgage right now is $200,000. We're gonna write a brand new loan for $300,000, right? Assuming you have that equity, let's say the house is worth 500 grand. Okay, so after the transaction is completed, you will get one lump sum of the $100,000. Pretty straightforward, right? One other thing to understand is this is one single payment, which is nice. Just replaces your current payment with the new one. Again, you get the cash out, big win, okay? Line of credit. What this is, it's similar to a credit card in the fact that you can access the line as needed, right? So let's use another example. Loan amount $200,000, the cash out you want is 100 grand, and the home is worth 500,000. So equity again is there. What we're gonna do is we're gonna actually write you a line of credit, which is using the home secured as collateral of 100 grand. So that means that you actually do not get a lump sum of money. You just have access to that line of credit when and if needed. Also, the one thing about the line of credit, it is a second payment you have on top of the current one that you have right now on your first mortgage. So there's two payments that you do have. Okay, now let's jump into the pros and cons of each. So some of the pros of the cash out refinance, one of the big ones is you're gonna have a fixed interest rate, right? You're gonna get better terms. You're replacing your current first mortgage with a brand new one, you're gonna have better terms for sure. Also, you know what your payment is going to be every single month, right? It's not gonna be a variable, it's not gonna adjust. There are options that you can choose to have an adjustable rate mortgage, which may make sense for some people, but typically people are gonna want to jump into a fixed rate first mortgage, get the cash out, everything's good to go, payment's not gonna change, you know what you're getting, right? Now, some of the cons of the cash out refinance. So if you're like most homeowners, probably took advantage of the low interest rates within the last 2 years. It is currently April of 2022, if you're watching this in the future, and we just had 2 years basically of the lowest interest rates we've ever seen in the history of mortgages. So, if you took advantage of that, good on you. Might not make sense to take out a bigger lump sum of money at a higher interest rate, which, man, I don't know. Hopefully rates go back down eventually, but I just don't see it on the upswing. So it might be tough to make that decision. Now, a line of credit. Okay, some of the pros of the line of credit are that you have access to these funds as needed. Okay, it's kind of like a peace of mind thing, kind of like an emergency fund, I would say. It's always nice to have that kind of like security blanket, whenever you need that. Medical debts happen. Life happens sometimes, and you may need to access that money to get you to that next step, which is good. Also, another big one is you don't have an extra monthly payment if it is not being used. So that's a huge one as well, right? So if you don't ever use it, you don't have to make an extra payment, which is a big win. Now, some of the cons of the line of credit, interest only is something that is pretty standard on these lines of credits, which means that when you pay every month, the payment that they request, if you have a balance, you're gonna pay only the interest. So your balance will never go down. It can go down if you make extra payments on top of the interest only payments, but they're not gonna require that, right? So also the interest rates are going to be higher than a first mortgage cash out refi, and they're most likely going to be variable. Right, so they're going to adjust with the market, and again, with the market on the upswing, it might be tough to make that decision for a line of credit. Also, you're going to have two payments instead of one, right? Now, some scenarios that might make sense for you guys. So first off, for the cash out refinance, if you have not taken advantage of the lower interest rates yet, then you may make some sense of cashing out and taking out that money on a fixed interest rate, which is either the same, maybe slightly higher, or even lower than where you're at right now. A lot of my clients that have substantial debts, especially if they're on fixed incomes, they might want to consider the cash out refinance, right? If you're on fixed income, especially, you're not going to get any extra cash. Right? Your income goes up very slightly, especially with inflation going on. I mean, it's kind of tough for a lot of people right now. So, you make your payment at the end of the month, not necessarily the interest. So if this can make you feel better and put you in a better spot financially, more comfortably, it's going to make some sense. Also, credit cards. A lot of people that are in high interest rate credit card debt usually only make the minimum payments, right? Typically from what I see, So if that's the case, you're going to pay these credit cards off in quite a while. A lot of the times they're 15, 20, 30 years even, based on what I see of making the minimum payments. So, it might make sense to cash out on your home, use that equity, leverage it, pay off these credit card debts, and instead of making these interest payments to these credit card companies, pay it back to yourself in your equity, right? Also, some of my clients, what they'll do, just a quick little tidbit, is they'll use that money that they save, right? Let's say they save $500 a month on paying off these credit cards. Well, cool, let's pay it back to themselves and the mortgage payment, and now they're paying the home off sooner, saving money and interest. It's win-win all the way around. So that may make some sense for you. Now, line of credit. Some scenarios here is that if you have a very good first mortgage interest rate, you probably don't want to touch it. So you can consider a line of credit. Also, if you want to have the peace of mind of accessing that money whenever you need it. Like I said, rainy days happen, and if you don't necessarily need the money now and have a great interest rate on the first, just grab the line of credit. It's usually pretty cheap as far as the financing. Also, if you have like a home improvement project, you're not sure how much it's going to cost you to get it done, you can do a line of credit so that you can, again, pull from it or draw from it as needed. And then lastly, I would say this is the most high level one. If you're a very good investor and you're an active investor and you're good with your finances and you're good with paying yourself back and your money back, then it could be good leveraging a line of credit so that you can do some investments, do what you got to do, make the money, pay it back, have it ready for when you need to do it again. It's always nice to kind of have access to that extra money if needed. Those are some pretty quick and easy examples and differences of the line of credit and a cash out refinance. There's a lot of nuance in these types of things. So if you have a scenario that you want to look into specifically, you can reach out to me in the comments below. I will check them and answer them personally. Also, if you want to follow me on my socials, I do have everything in the description bar below as well. I'm going to be pretty active on those. And if you do like this video, please consider subscribing and liking this video. My goal is to put these things out for my clients so that they can be empowered with knowledge when looking at these things. It's things that I wish that I knew when I first started in the mortgage industry. So other than that, I appreciate you taking the time to check out my video, and I will see you on the next one.